One company stands above the rest as being the world's largest assets manager. It has its hands in almost every major business in the world. BlackRock. The New York-based investment giant has grown exponentially in the past decade and now manages assets worth over $9.5 trillion. That's half of America's GDP at almost $21 trillion in 2020. There's a reason why you don't hear about BlackRock like you do Bill Gates or Jeff Bezos. Which, by the way, BlackRock is one of their biggest investors. BlackRock was founded in 1988, initially as a bond investment firm. Its founders, Larry Fink and Robert Capito, were former executives at the First Boston Corporation. The First Boston Corporation was a major American investment bank, and the firm was involved in various areas of investment banking, including mergers and acquisitions, underwriting, and trading. However, it wasn't until 1995 when BlackRock made its first acquisition of a fixed-income investment management unit from PNC Bank that it began to grow. Throughout the next decade, the firm experienced huge growth due to its continued goal to acquire more investment managers, including Merrill Lynch Investment Managers and Barclays Global Investors. All this time, the company's focus was on risk management, which refers to the process of identifying, assessing, and mitigating uncertainties in investment decisions to optimize returns and safeguard investment capital. This was an approach that paid off during the 2008 financial crisis. You can probably guess some of the major players in the market during this time. The 2008 financial crisis was a rough time for most people, especially the hard-working low and middle class. BlackRock rose during this time of financial struggle, and they saw an opportunity to grow while others were trying to keep their head above water. Debt rose to new heights, and today the average American has sunk into an average of almost $59,000 of debt. 77% of American households have at least some type of debt. Debt is one of the most enslaving things one can put on oneself, but often people have no choice but to borrow money for a college education or a house. It takes years, often decades, to pay off these large amounts of debt. Most Americans have debt for car loans, educational loans, and home mortgages. BlackRock has stakes in over 16,000 companies worldwide and is one of the largest shareholders in many of them. BlackRock doesn't just participate in the global market. Due to its massive holdings, it is a pervasive force that shapes it. This makes market manipulation much easier for BlackRock. One compelling example of BlackRock's manipulation of the financial market is its handling of UniCredit shares. In 2014, the government authority in Italy responsible for regulating the Italian securities market, also known as Consob, fined BlackRock approximately $204,000 for alleged market manipulation related to the firm's stake in UniCredit, which is an Italian global banking and financial services company. The details of the case revolve around BlackRock failing to inform Consob that it had increased its voting stake in UniCredit to a little over 5% in June 2012. Italian law requires investors to disclose any changes when their shareholding crosses certain thresholds. BlackRock did not do so until January 2013, 7 months later. The delay in disclosure, according to Consob, allowed BlackRock to manipulate the market by keeping other investors in the dark about its increased influence over UniCredit. This case drew attention to the broader issues of transparency and corporate governance practices within the investment industry. Critics argue that such actions can undermine financial stability and trust in the markets, potentially leading to unfair advantages for certain players and disadvantaging others. Some people believe BlackRock has the power to manipulate global markets due to the colossal size of its holdings. Does this undermine the rules of fairness of the economic system and the free market? Some people say that the political system, too, is at risk in America. A prime example is Brian Deese, who was the global head of sustainable investing at BlackRock before being appointed as the director of the National Economic Council by President Biden. Deese's appointment stirred controversy due to BlackRock's significant influence over financial markets and its large ownership stakes in various companies. Many people expressed concerns about potential conflicts of interest, given BlackRock's extensive business interests. Large companies spend tons of money lobbying politicians to get what they want, like what healthcare you get, what you eat, how much your money is worth, and what you use to fuel the car you drive. BlackRock's wealth is half the size of America's entire economy, giving them power over, well, basically every aspect of life. At its current pace, BlackRock could have $23 trillion in assets by 2034. That means that BlackRock is projected to own the equivalent of America's entire current GDP by the year 2034. Should one company have that amount of control and power? BlackRock isn't just any investment firm. It has been flying below the radar and is a silent actor in a high-stakes buying war, holding significant shares in major companies that you interact with on a daily basis. To help show you the sheer magnitude of influence and control BlackRock has, let's start with a bird's-eye view of what they currently own. This is BlackRock's top 25 equity holdings as of May 2023. What you are looking at accounts for less than 11% of BlackRock's total equity holdings. These are its biggest investments. What you are looking at is a total of about $1.1 trillion. Let's zoom into their biggest equity holding, Apple. As of June 2023, BlackRock's equity in Apple is over $201 billion. They own almost 6% of Apple's nearly $3 trillion net worth. The other major investors in Apple are Vanguard and State Street. Vanguard owns 6% of Apple at almost $253 billion, and State Street owns just shy of 6% of Apple at over $112 billion. Are BlackRock, Vanguard, and State Street three random asset management companies? Well, on the outside, they do look like three separate companies, but to no one's surprise, when you dig a little deeper, you can see that BlackRock, Vanguard, and State Street actually own the largest shareholdings of each other. So they are really just one large company split into three smaller ones. So, if you tally up the total asset holdings of BlackRock, Vanguard, and State Street in Apple, together they own more than 20%. That means they hold almost a quarter of the control in Apple. You can bet they have significant control and power over what Apple says and does. This pattern repeats itself with Microsoft, which is the second biggest asset for BlackRock, Vanguard, and State Street, Amazon, which is all three companies' third biggest asset, Google, and so much more. If you add up the total assets under management for BlackRock, Vanguard, and State Street, you will be surprised to find that they have over $20 trillion in their portfolio. That is only $1 trillion less than America's entire GDP. Having so much control over some of the biggest companies in the world carries a lot of responsibility. With so much power, it would be easy for them to manipulate markets and companies' influence for their own personal gain. All they would have to do is just hint or threaten to sell the majority of their shares in a company, and other shareholders might be scared and do the same thing. They could threaten the collapse of a company like Apple, Microsoft, or Amazon, drastically causing chaos in the stock market. In just Apple alone, that would be a sell-off of $532 billion if Apple didn't agree to something demanded. The fear and panic could bring Apple to its knees if the market thought they were in trouble. Let's take a look at it this way. Apple's operating cost in 2022 was $275 billion, which means that BlackRock, Vanguard, and State Street own more than 2 years of Apple's operating budget. That is crazy that BlackRock, Vanguard, and State Street could threaten more than 2 years of Apple's ability to operate in one fell swoop. This ultimately gives BlackRock, Vanguard, and State Street power beyond measure with a $20 trillion portfolio. Most people don't even understand what $20 trillion looks like. This is what $100 looks like. This is what $10,000 looks like. Now this is what $1 million looks like. As of 2023, the average American makes a little less than $60,000 per year. That means it would take almost 17 years to make $1 million. This is what a pallet of $100 million would look like. It would take 10 of these pallets to get you to only $1 billion. That is a lot of money. Now this is what $1 trillion looks like. If you multiply this by 20, then you get $20 trillion. It's hard to fathom, but this is what BlackRock, Vanguard, and State Street have. In an economic landscape where colossal entities like BlackRock wield immense influence and power due to their vast portfolios, it can be hard to break into the market. For example, let's say you are looking into buying a house. Buying a home is a significant milestone in many Americans' lives, filled with pride and joy, especially for first-time buyers. However, it is extremely rare for individuals to have enough resources to afford the full price of a home up front. This is why most people have to take out a loan in order to buy a home. Imagine a situation where you find your dream house. You make an offer matching the seller's asking price. You feel confident about the purchase. Suddenly, you find out someone else outbid you. snatching away your dream home. This is becoming a common occurrence due to large investment firms like BlackRock indirectly invest in single-family homes through companies they own, such as Prologis and Annaly Capital Management. These two companies, worth over $162 billion, are among the largest real estate investors in the U.S. Now, they can sell your dream home at a higher selling price, or they might put up your dream home for rent. Either situation is not ideal. As of 2022, about 22% of all single-family homes are owned by investment companies, marking an increase from about 15% back in 2012. Prologis and Annaly Capital Management are the two largest real estate investment trusts ranked by total assets owned. BlackRock, along with Vanguard and State Street, collectively own substantial shares in these companies, allowing them to dominate the market easily. Their significant investments enable them to outbid individual buyers consistently. These companies have been increasingly investing in real estate, contributing to a rise in investor purchases of single-family homes. Unfortunately, this doesn't just apply to real estate. Take some familiar companies like Doritos, Tide, Oral-B, and Starburst, all dominant companies in their industry. You guessed it, these companies' holdings too are owned by just a few companies. In the past decade, there has been a lot of market consolidation, and now these 11 companies have been buying out most of their competition. With these major shifts in consolidation, these companies are now controlling their market. For example, let's say you need to go to the store and pick up some laundry soap. You have used Tide most of the time, but you decide to buy Gain this time because it is on sale. Actually, it doesn't matter which one you buy because the same company owns them both. And you guessed the largest shareholders in that company are BlackRock, Vanguard, and State Street. If you look at this graphic, BlackRock has almost all of these companies in its portfolio with the exception of Mars. Mars is a private family-owned company. By looking at this graphic, who do you think controls the price of these products and their markets? With so much control, power, and influence being consolidated, what should be done about it? Should BlackRock continue to be able to grow in our free economy, or should the government butt in and find some ways to restrict their growing monopolization of the American economy? Some people think we should let capitalism run its course. What do you think? In the US's capitalistic economy, there are antitrust laws prohibiting a single firm from having unreasonably control over competition or maintaining monopoly power. Is BlackRock avoiding scrutiny because they are masking their assets behind Vanguard and State Street? With so much power, could companies like BlackRock secretly manipulate legislators into turning a blind eye? In a market where there are equal opportunities, when should antitrust laws be enforced to prevent monopolization? Who suffers as a result of monopolization? Typically, the lower and middle classes suffer the most and can fall into more debt. If they control food prices, gas prices, healthcare, the technology you use, and more, will they soon control 99% of the American workforce as well as the economy? So, is a free market truly a free market? Historically, people have been scared about what a tyrannical government could do, but maybe we should be asking, what can one company's unchecked power and influence do? So, what do you think will happen if BlackRock continues to go unchecked and unchallenged? Let us know in the comments below, and don't forget to leave a like in support of our independent journalism. Thanks for watching.